The borrowing calendar, the borrowing plan that was much awaited by the street, that's finally out. The government said they will borrow 4.42 lakh crore rupees via gilts between April to September, precisely the first half of FY20. The budget was pegged at for FY20 at gross borrowing of 7.1 lakh crore rupees. So it is approximately 62% of that. Maithili Busnurmath is there, of course, and with Madan Sabnavis and Manoj Rane joining us. Maithili ma'am, just before I let the floor open to you, just want to get in your perspective as to the number is on the higher side of the range that we were expecting.
No, this is in keeping with the budget documents. What is interesting is that unlike last year when the first half borrowing was toned down to about 47% of the total because interest rates at that point of time were rising, now we see the government reverting to its traditional pattern of borrowing over 60% in the first half, clearly capitalizing on the fact that interest rates are lower, that considerably lower than they were in the month of, say, October last year, September last year, when they touched almost 8%. And the government has also elongated the tenure of the bonds. So clearly, not only do they want to capitalize on the lower rates of interest, they also want to lock in for a longer period, which is what is interesting really about the government's borrowing program. But let me now turn to Manoj Rane and ask you, Manoj, what were your first thoughts on the government's borrowing calendar of the first half? Remember, this time the government had to take the Election Commission's clearance before announcing the borrowing program. So my first question to you really is, was there anything in the borrowing calendar that really, to your mind, necessitated Election Commission approval at all?
Certain other things did not need Election Commission approval. Let's not delve into that. So I'm a bit surprised as well. Having said that, I think you made a very pertinent point that last year, March, when the last year's calendar was announced, we had just come off a 100 basis points increase in rates. It was bound to be a bit of a challenging situation. At the same time, if you look at yields today, they are substantially down from last year. We saw a peak in September, I think 8.2 or something like that. Thereafter, of course, it was a falling cycle, and today we are at what, about just over 7.3, 7.35. So having given a fairly decent rally in terms of bonds, and with rates having come down, the government, I think, has much more elbow room to borrow money in the first half. You also made another point, I think, which everyone needs to remember, that 5 years in succession, the borrowing program has been front-loaded. It was only 2018-19 that we saw the borrowing program getting deferred to the second half of the year. The other point, Maithili, I think, which not too many people have noticed is, OMO purchases 2018-19 was significantly higher. I think 2.9 lakh crores or something like that. So almost 50% of the entire year's borrowing program. So, that is something which, the secretary was asked, and he said it's, RBI's prerogative, it's not for him to comment. So really speaking, I think that gives some amount of flexibility for the RBI to be reactive on rates as, the borrowing program goes forward. The other point I heard, but maybe you want to comment or someone else wants to comment, is the Treasury bill borrowing has substantially been raised from 8,000 crores, every week to 20,000 crores. Did I hear right? Or there is something else about it? And lastly, I think the government is a bit more sanguine, along with RBI also, with the FX swap having been such a success, that probably they do not have to look at doing OMO purchases of the order of 50% of the borrowing program, gross borrowing program.
Yeah, Manoj, one small clarification on the Treasury bill purchase. What the secretary said was a 20,000 crore repayment of 12,000. So there's a net of 8,000 crore inflow every week. That's what he said. So it's only the net figure of 8,000. But now let me ask Madan. Madan, what was your first initial reaction to the first half borrowal calendar?
No, in fact, I think it was more on expected lines. Even we were expecting something like 60% of the borrowing program to be completed during the first half. We should remember that the first half is typically the slack season. Of course, they no longer call it the slack season when the demand for funds is lower. And there's also this issue of saying that since we have elections coming up and most of the investment decisions of corporates have been deferred for the time being, so it was quite appropriate for there to be some kind of front loading and having the 60% number. But I think one concern which one could be having out here, especially from the point of view of the market, is that so far we have seen that the growth in deposits has been lagging that in credit, in which case if there's not a recovery in deposits growth, because during the pre-election time there tends to be a tendency for more withdrawals to take place, more cash to be held. In that case, we could be seeing the liquidity problem actually carrying on for some more time, which could once again necessitate some more OMOs from the RBI. So I think that will be interesting to see what really happens in April and May, when we'll be this will be the peak of the election season, where cash will be hoarded, deposits may not grow, and there may be more intervention coming from the RBI through OMOs.
Manoj, one thing that is really interesting is that even though deposits really haven't grown very much, credit hasn't really picked up in a very big way. So to that extent, I think banks will be able to buy this government borrowing, more than 60% in the first half. There will be appetite for government securities. Do you think, or am I right on that, or do you disagree that you think credit will pick up? There are signs of recovery, and so there might be a squeeze as far as government borrowing is concerned, and we might see interest rates go up, even though the overall trend is towards a softening of yields.
Unfortunately, Maithili, credit pickup is the holy grail which all of us have been chasing for I don't know how many years now. I think from the previous government, and this government's term is almost over. So I do not really think that that's going to be much of an issue, and you rightly pointed out, with deposit growth being there and credit growth being less, there will certainly be money to go and buy government bonds. Additionally, I think the banking sector will also be a little more, little bit pressured, I would think, from the fact that there are unlikely to be as many OMO purchases as have been there in the past year. So, that gives a comfort to the banking system. In fact, that kind of artificially suppresses yields to a certain extent. So that might be a little bit of a concern. Also, another point which I noted was they are talking about a 7-year benchmark. Also, like you observed, I think a net of 8,000 crores of additional T-bills, which is over 50 weeks. 50 weeks, it comes to about 4 lakh crores, is that right? Yeah, something like that. So the point is that you will have a lot of additional supply of paper at the shorter end. Banks' treasuries typically go out to 5 years, but 7 years, why not? You typically do not have liabilities of all out to longer than 5 years. So the treasury ALMs, the asset liability management part of the bank, typically tries to buy shorter dated because you do not have longer term liabilities. So maybe there will certainly be appetite, and the fact that you're probably going to see more paper available at the so-called shorter end might indeed whet an appetite which might otherwise have been suppressed a bit due to probably a paucity of OMOs compared to last year.
Wasn't the government's move to kind of elongate, as it were, the government's borrowing, repayments, the entire borrowing program? So you now have a new tranche from 15 to 24, over 25, and together they add up to a substantial portion of the overall borrowing. Is that a smart move, you would think, given the fact that interest rates are soft, and we're seeing globally also interest rates are once again softening? So is that a smart move as far as managing government's program is concerned, borrowing program is concerned?
No, I think you've answered the question already, because it is definitely a smart move. By elongating the tenures, you're able to lock into the debt for a longer time period. And given the fact that interest rates are at a low level, and we are also probably expecting that the RBI will definitely be lowering the interest rates by at least 50 basis points during the course of the year. And there could be something happening even on next week when the monetary policy is announced. So there is reason for the government to actually ensure that the debt burden or the debt repayment doesn't really come up anytime soon, and you're able to phase it out over a longer time period. But I think this is clever management of debt, and by putting it to beyond 15 years, going up to maybe 25, 24 years, I think that would be helping the government a big way. But the important part will of course be the direction of interest rates. As long as they're able to lock it in at low rates, it's going to be beneficial. But I think that could be arranged by the government depending upon how the interest rates move, because if there is any untoward incident during the tenure of this particular year, then it's possible for the RBI to actually go in for a shorter duration debt rather than long-term debt.
But Manoj, would you agree that this has been a lucky government? Because you started off a year ago, interest rates were roughly in the range of, on 10-year government bonds were roughly in the range of 7.4, 7.5. Then we saw them shoot up to 8%. And then now we've seen a dramatic reduction once again. So even though interest payments, if you look at the budget documents, interest payments for the year have ended up higher than the budget estimates, this year we could well see interest payments actually come down. So would you agree that this has been a lucky government? Interest rates have softened, oil prices have not increased very much. So overall, even though the fiscal deficit numbers that we've just seen released this evening don't show a very happy picture, overall it has been a pretty good going for the government.
Yeah, you're right. Lucky certainly, because interest rates did fall over the tenor of the year, and I would also ascribe some of this to reasonably, I would say, you could say deft, but you could also say aggressive liquidity management by RBI. So when you have 50% of your gross borrowing program bought back in terms of OMO purchases, then you do not have to look too far to see why rates really came off in the last quarter of 2018 and the first quarter this year. So to that extent, I think it's not entirely luck. And also you see, I think what has also helped to a certain extent is a bit of a change in the overall USD sentiment. Talk of rate hikes at the beginning, and then now we are talking about rates not going up anymore, which has led to a fairly significant capital inflows. So your point about despite the fact that current account deficit numbers are bad, largely led by trade, you've seen the currency bounce back so sharply over the last month or so, and that is not, again, the reason is not far to see, because we've seen FPI inflows of I think 5 billion just in March alone, equity plus debt. So capital flows have turned. That also has helped, and I think I do feel that RBI has been far more hands-on and proactive, of course prompted a lot by market players and receptive to market players appeals, and that has led to fairly decent management of available liquidity in the system, which has in turn supported the government borrowing program and in turn the rates.
Madan, I think Manoj spoke of deft management, liquidity management by the Reserve Bank of India, and we've seen a latest instance of that $5 billion swap. And given the response that was pretty good from the banks, will we see a repeat of that, and will RBI ensure that liquidity always remains comfortable to at least, because remember the RBI has two responsibilities. Not only is it the monetary policy authority, it also is the merchant banker to the government, and it has the responsibility of ensuring that government borrowing goes through smoothly and as low interest rate as possible. So do you think we can anticipate a repeat of that kind of swap rather than more OMOs, Madan?
No, I think it will be a combination of both, because there is a limit to which you can have the rupee swap as such. Because if you look at the total quantity of dollars which commercial banks are holding on to, I think it's something like 1.2, 1.3 lakh crores, and already we have seen 35,000 crores going off. So I think you can probably have another 1 or 2 rounds, but after that I think it will have to be a pause, and it'll have to go back to the conventional open market operations. And that's the clue. I think the RBI has definitely been working very adeptly to ensure that market stability is maintained. And the fact that we've had 3 lakh crores of OMOs bears testimony to this. And in a way, I would say that the large borrowing program of the government has been met in an indirect way through the monetization which is taking place through the RBI. Because here we have a system where the government borrows, the banks subscribe to the paper, and then there's old paper which is sold to the RBI. So I think this has been a rather well-balanced kind of way of dealing with both liquidity and the government debt.
Manoj, last year we saw the government halfway through the year reduce its borrowing target, and the way they did this, in fact, the way they managed to reduce their borrowing through the market was essentially to dip into the NSSF, National Small Saving Fund. In fact, last year, as against a 1 lakh crore target for NSSF borrowing, they actually ended up borrowing 1,25,000 crores. So will we see a recourse to that again this year, and so that the pressure on the bond market, government bond market, is less, and the government borrows from the NSSF, but of course that has higher interest costs. So do you see the government doing more of that, Manoj?
Maithili, I think Secretary Garg made a fairly important point, and it's for all of us to see. That the net borrowing number has been fairly stable over the last several years, and there is a reason for that, because they're supposed to have cut the fiscal deficit target fairly substantially by now, but the fiscal deficit target has remained fairly the same with some marginal tweaks. So the point is that the net borrowing program hence has remained reasonably stable, within a few maybe minor percentage points of itself. So given the fact that net borrowing has remained the same, really our entire discussion is about gross borrowing. So gross borrowing puts pressure and can be managed. But having said that, the resort to external measures such as using the NSSF, for instance, for funding the government's effectively its deficit and as a replacement for market borrowing, will, I would think, be more likely to remain at similar levels rather than to increase. But your point is valid, that I think they started with a 75,000 crore target and ultimately ended up at 1 lakh crore or 1,25,000 crore. I hadn't seen the latest numbers, and I think this year, I don't know whether they've announced a target, but market was expecting that they will say something like 1,25,000 crores is what they're going to borrow from the NSSF.
Okay. Okay. Madan, one last question to you. I think Manoj spoke about the net borrowing target, which the Secretary did say is more or less constant. But should we be looking at the net borrowing, or should we be looking at gross borrowing? Because to my mind, we should look at the gross borrowing, because that is what the government is going to approach the market for. Of course, a part of it might be used for repayment. So should we look at gross, or should we look at net when you're thinking of the pressure and the impact on bond yields? Madan, very quickly.
So, as an economist, I think one will be looking more at the net borrowing program, which has been constant in this 4.5 crore range. But I think from the point of view of the market, I think the way they're looking at it is how much of additional paper is going to come into for sale. I think the gross borrowing number is more pertinent. So I would tend to think that if you're looking the way in which the bond yields are going to move, it's going to be driven more by the gross program rather than the net borrowing program.
Oh, absolutely. But thank you so much, gentlemen, for joining me in this discussion on the first half borrowing calendar of the government, which has just been announced.